had to describe Fortress's past year in one word, I would say it's transformational. It's been a year in which we fixed the original share capital structure, and I think we've given shareholders a total return of 40%, so it's definitely a transformational year for us.
We had a particularly complex capital structure that was unwound in February of last year, and since then the focus has shifted from the capital structure really to the business. The resultant of this now corrected capital structure or single share is we reintroduced dividends in March of last year, and again in September we're able to declare a dividend.
Fortress's strategy over the last few years has really been to cut the tail off. We've had a lot of old assets in the office sector which we didn't like, in the industrial sector which we didn't like, and really our strategy has been to sell those assets and to recycle those proceeds into new assets, into better assets.
Fortress is quite unique in the blend of assets that it has on its balance sheet, being a large component of an offshore asset, the stake that we hold in Nepi Rockcastle, as well as a significant historic developed owned logistics portfolio.
Fortress is a very significant player in the logistics market. We have a portfolio of 20 billion of assets in prime logistics nodes, which makes us one of the largest operators of logistics warehousing.
The Fortress retail strategy is to focus on the commuter and convenience retail shopping space. So this includes townships, rural retail, suburban retail, and CBD retail. Over the last couple of years, these properties have proved to be quite defensive through the pandemic and through the low economic growth period in the country. So I think going forward, as the economy improves, we should see improved performance coming out of the portfolio. We've also successfully implemented redevelopments and expansion projects, including 204 Oxford, where we did a redevelopment. We've completed Abaqulusi Mall in KZN, and that's trading well. Other projects that we're busy with currently include Sterkspruit, where we're doing a 5,000 expansion to the existing shopping center. Another project that we're busy with at the moment is the introduction of ShopRite at Bloemfontein Value Mart. In the following year or in the next 12 months, we expect other projects to come online, including Matox in Limpopo, where we're planning an 8,000 expansion. And we are also likely to do Zanin Lifestyle, which is a 20,000 expansion that we'll do with our partners in that development.
The other part that we've really seen a lot of growth in is obviously the e-commerce. That's ongoing, and I think that's just a change in the way companies are doing logistics, and that's necessitating new moves into more modern buildings and more efficient buildings.
Fortress's performance over the last 12 months on the JSE, I think we've delivered a total return of nearly 40%, which has been a lot better than we expected this time last year, but the sector's had a really nice rally post the optimism of the GNU and also slightly lower interest rates. So it's certainly a positive 12 months, and I hope that we can replicate that going forward. In terms of unlocking value, I think again we've offered our shareholders the ability to take a slightly enhanced dividend in the form of some Nepi shares, which is one of our core assets. So if you're an investor and you like real estate and you buy a share in Fortress, what you're getting is you're getting a share of Nepi at its traded price, in other words, at the stock market price, and you're getting the rest of Fortress, our 14 billion rand of NAV, which is 32 billion rand of gross asset value, at a more than 50% discount. What the market can expect from Fortress going forward is still some unlocking of value. We're still sitting at about a 30% discount to our net asset value, and that's a gap that I think we are quite focused and determined on closing, so I think that will provide some upside. But then over the long term, we have a really good portfolio of new assets and of performing retail and of shares in Nepi Rockcastle, and then we have over 200 million euros of logistics assets in Eastern Europe, mostly in Poland, and one logistics park in Romania.
Our first foray into Central Europe was in 2017, although the first acquisition was only bedded down towards the end of 2020. And what we did was we drew on our experience from Nepi. You'll be amazed at the network that we have access to through our Nepi investment in Central Europe. We have a pipeline of development in Central Europe through acquisitions where we bought semi-completed parks. And again, this was the yield uplift for us because we can develop at a better yield than we can acquire the existing assets for. We have an ambitious team and we have ambitions around growing this portfolio. I see no reason we can't grow this to the size of Nepi.
We've built a very nice entrepreneurial culture within Fortress, and I think that excites me, that we should be able to do a lot and to grow that experience in-house in Fortress.